All right, good morning, good morning, good morning. This is your boy, Trust My Levels. I don't know if the last video I just did even went through, so I guess I'm gonna do this again real quick because I don't want y'all to miss out on it. So just looking at the market and what has happened overnight. So the futures are down 37.76, 38.18. You know, yesterday I was looking for those 38.50s, 60s, 70s, 80s. And then we ended up getting to it this morning. So, well, these are futures again. So we're gonna see when we open up. It gives us a great indication of where we could potentially open up. So 37.18, I'm sorry, 38.18 is the close from yesterday. So we're gonna see where we open up. Let me look at SPY real quick. So there we go, 37.16, 33.76.17 is where we're at for the SPY area. So well, that's to be it, but it's gonna keep fluctuating until in 15 minutes we'll open up. So going back to SPX again, my SPX daily ATR, let's come back again. So it's $97. So I'm gonna probably, I'll probably split that. I'll just round it down to 90 and then split that in half. So about 45 up, 45 down when you're looking at the strikes. And then, so if you set yourself up, depending on what we do. So just a review of what happened on Tuesday. So we're looking at a gap down. So on Tuesday, we had the gap ups. All right, so Tuesday we had a gap up. And I want you to look at this because you could potentially have something like this again, but in the opposite direction. So if you are looking here, maximize this. So let's just say we get a gap up, or we get a gap down here, which we probably will. So we get a gap down. So what you want to do is start looking for those reversals. So if I see, the day gap down, I'm gonna start looking at that 4 hour, looking at the hour, looking at the 30-minute. And then I still have my 2, 5, and 15. The 15-minute starts to give me, the 2 minutes starts to give me that early warning. Hey, there's a potential reversal because you start seeing those small candles start happening. I'm not trading off of it, but I'm going to see that 2, which is going to trigger the 5, which is going to trigger the 15, which you got that, it's a domino effect. So the 2, 5, and 15 will start giving me that early warning. And if I get an inside bar on this 1, if I get an inside bar on the 15, like today, if we gap down, I start getting an inside bar on the 15, boom, I'm coming in, marking it, and I'm saying, hey, that if it starts to do here or here, I'm taking a trade. Going up, I'm taking it down. If I'm wrong, I'm gonna be wrong fast, and I'll have like a 10%, 15%, especially on like this upward one here, about a 10 to 15% stop loss on here, because as soon as that comes back down, it's probably wrong. So I want to be wrong fast. Now on this one down here, I'll probably have a bigger stop loss depending on what you did. But this is, remember, this invert this chart, turn it upside down, and this is what you're going to be looking for today, trading that reversal. So if it drops down and then we get an inside bar going back up, start looking for potential trades back to the upside within that $40 or whatever it is when you're targeting the top of the candle that opened, or you're targeting the previous candle before you trigger. So, and just remember that. And today, remember, we have quarterly, everything, the quarterly expirations, the monthly expirations, and then we start a new month tomorrow, start a new quarter tomorrow. And remember, the decoupling of the quarterly and monthly won't happen until the end of July. So those are going to look the same. And then that weekly, daily, and all of that will uncouple on Tuesday, because I think Monday is a holiday, I believe, right? Yeah. So, so just be on the lookout for that, because remember, the quarterly signals are ending today. So then we have to get that new quarterly signal. The monthly signals are ending today. So we got to get those new monthly signals for whatever you're looking at. So, and I watch SPY, I watch the indexes. So again, just, split that difference. Find your ATRs, split the difference to see, especially like something, if you're trading on the 10-minute, I got an ATR, or 15-minute, I got an ATR of 10. And if you want to trade on that, make sure you get something that's very close to the money, so that you're not like coming out here to the $80 out, where I'm coming up here trading on the 4 hour and 30-minute and all of those other things. And then, we got the daily up here. So I would have, like, if I came to the daily, I would be like, oh, puts below 37.99, targeting 37.44. So right now I still have a target of 37.44. So you could potentially look at those 37.40s, 37.45s on the daily. But again, wait until we get that reversal. wait until we get this pop up or pop down. You see something like this after this morning. So this is exactly what we look for, like this morning. Let's just say we came in here and it gapped down, boom, it gapped down. That next candle, even this is on the daily, you can translate this to any time frame. You drop down, boom, it pushes down. Now you have a hammer at the bottom, preferably one that has a very long wick, so you can get that Momo hammer coming back up. And as soon as it crosses the top of that hammer, as soon as it crosses that wick, with some conviction, I'm gonna probably take that trade going up. So this is something that we're looking for when we gap down this morning. And if we continue down, I'm still gonna be looking for an actionable signal. Actionable signals, and I'll repeat, actionable signals. Make sure you find your broadening formations. I need to go back and see, because I got a bunch of different drawing sets. So I need to come back and see where my broadening formations are accurately. But I don't want to put all that up on the screen because, you know, people, poof, things look crazy. Once you start drawing all those broadening formations, your chart's going to look crazy, but hey, it works for you in the end. So everybody have a good day with trading. Again, with SPY, look at that. I think they have a $9.25. So I would, you know, split the difference on that and probably get those 450 and look at 450 up, 450 down, and try to stay within that range for your strikes, so that you can potentially get in the money very fast if we have a good push in either direction. So make sure you have those up. I use Active Trader on TD Ameritrade so I can look at the contracts, so I can see everything that's going on with the contracts, look for those volume spikes, look for everything. Just find what you can find and just pay attention to what's going on those lower time frames and the higher time frames. So let's go. All right, y'all. Have fun. Be safe. I'm about to study. I got class in the morning. I got class in like 20 minutes too. So, hey, y'all have fun. All right. I'll let y'all.